if you want fast, even faster, even cheaper, and programmable in new ways, but newer, so it's riskier because you want to make sure that it actually succeeds, then it'll be SUI, which came out of Facebook. So these are like thinking about cloud storage or other big network things that you use. That's what these are. And people confuse it because the word currency comes up in the title. The currency part is basically, think of it as the equity of the network.
According to Raoul Pal, a former CEO of Goldman Sachs, some major altcoins are expected to come out of the waiting room, potentially extending their boom into the first quarter of 2026. Based on his observations, the Total 3 Index, which measures the market capitalization of all cryptocurrencies, excluding Bitcoin and Ethereum, is ready for launch. The other index, digital assets excluding the top 10 by market capitalization, remains on hold, the expert noted. We must learn patience. The path is clear, but one should never expect a perfect outcome. According to Raoul Pal, SUI might be the biggest coin after Ethereum and Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
$100 trillion. What's your, again, what's your guess of how that is made up? We got DeFi. We've just seen in gaming that EA Games deal. You've got the big investors going into that space. How do you see DeFi, gaming, real world asset tokenization? You got a guess on what are going to be the big sectors?
I don't, but look, we know that, as we said, asset markets are going to get tokenized. There's a lot of people who want to tokenize real estate, but I'm not sure there's buyers of those tokens. All the real estate people want to sell tokens to find more liquidity. We're seeing the asset management industry, people like Apollo and stuff, talking about tokenizing theirs. I think what they're trying to do is find new buyers for private equity. So that kind of, I'm not sure how big that is compared to equities, which is a very efficient way, bonds, money market funds, that kind of stuff. I think that's really efficient. The gaming is a huge market. So the scale of this thing is much bigger than people still understand. And so even at $100 trillion, what is the value of the internet today? That's kind of the question we're asking. What is the value of this? It'll be probably one of the most valuable things humanity's ever had, because it is, for the digital age, the global store of value, transaction layer, and kind of contract settlement layer. Now, everything that humans do is basically a contract. Even you and I today, it was an email, but it was like a written contract. Is hey, I'll turn up today. All the people watching this, it was a contract. The biggest misconception is what derives the value of a network. There's nothing backing it, because they're thinking about currency. All money is actually a social consensus mechanism. Even gold. We decide gold has a value because
you can't eat it.
Shininess, and you can't get rid of it. It doesn't destroy easily. So it's a great asset. So the perception is, what is the value of these things? Why is this thing worth $500 billion in the case of Ethereum? And what people need to understand is the value of a network. So a network is like Amazon is a network of goods and services, including cloud storage and a whole bunch of other things. A network is derived by Metcalfe's law. Metcalfe's law is how you value a network, which is the number of people on the network times basically the total value transacted on the network.
Pal is one of the few recognized figures in the cryptocurrency sector, both institutionally and individually. A former hedge fund manager at GLG Partners, now Man GLG, Pal abandoned traditional finance after investing in the early stages of the cryptocurrency market. He has since co-founded Exponential Age Asset Management, a digital asset investment firm, as well as co-founded the financial media company Real Vision and the research publication Global Macro Investor. The idea behind XPAM is to create an access point for family offices and institutional investors entering the cryptocurrency market. Cryptocurrencies will grow from the current $4 trillion to around $100 trillion by 2032, if we consider the trend growth rate. Bitcoin isn't everything because it's only a part. There's also the technological aspect, smart contract platforms, and the associated application layer. A large part of this market will be cornered by hedge funds in liquid markets. So the idea is to simplify things once and for all. Many people don't understand the mechanisms that influence Bitcoin. They think it's a diversified asset, but that's not the case. It's an asset driven by the economic cycle, which in turn is driven by the debt refinancing cycle. Liquidity is the most dominant macroeconomic factor in the history of investing. If everything is cyclical, diversification is practically doomed to fail. Only two sectors outperform depreciation and inflation, the Nasdaq and cryptocurrencies. Considering most hedge funds, mixed portfolios, and endowment funds, almost none can outperform cryptocurrencies. We're all familiar with the cyclical nature of an asset at this early stage of its adoption curve. We've seen a very similar pattern with Amazon, Google, and Facebook. All suffered drops of around 90% shortly after their IPOs, something very common as online adoption begins to consolidate and volatility decreases over time. Cryptocurrencies have experienced sharp declines. Last time we saw an 86% drop in 2022. We'll see a 70% drop. Next time, it could be 50%. Volatility is real. Paul believes the cryptocurrency cycle is not near its peak, but is entering a longer, more powerful expansion phase that could continue until 2026, driven by an upward trend in global liquidity linked to public debt dynamics. The most important macroeconomic variable of all time is the increase in liquidity by governments and central banks around the world to manage debt at a rate of 8% per year. He distinguished this continued depreciation from measured inflation, cautioning investors to think in terms of a hurdle rate, not current events. Paul dismissed the recent chaos in the cryptocurrency market as mere noise and urged investors to look beyond short-term volatility. He argued that traders obsessed with leverage and daily price fluctuations are overlooking reality, the ongoing digital transformation of the global economy, and the abundant liquidity that drives it. He believes that as long as the world continues to digitize and liquidity continues to flow into the markets, the long-term outlook for Bitcoin and other cryptocurrencies will remain intact. He believes massive debt refinancings by governments and corporations are injecting more capital into the system, fueling appetite for risky assets like Bitcoin and Ethereum. Temporary market declines, he added, are simply the price of entry for those participating in what he sees as a historic financial revolution. His advice was straightforward, and with his usual boldness to stop speculating in the market, think long-term, and BTFD, and not waste the opportunity. His comments echo the sentiment of major investors like Paul Tudor Jones, who recently described Bitcoin's weakness as the calm before the storm, suggesting a strong rally could follow. Market data appears to confirm this cautious optimism. Bitcoin has rebounded to $112,000 after falling near $102,000 earlier this week, with futures trading volume up more than 150%, indicating that institutional players remain committed. For Paul, these moves indicate that astute investors are quietly preparing for the next major crypto bull run. As liquidity increases and technology continues to transform finance, he remains confident that digital assets will lead global markets into their next era of growth.